because they can do it automatically for you, or you could do it yourself. I don't do it automatically just because I have to keep remembering to tick the box. Otherwise, it posts everything. So I just sort of post them myself. If I find something I want, I just go to LinkedIn or Quora or Facebook and I just post it myself. But it can do it automatically for you, which is stupid, right? So I think at the end of the day, this is a great tool for you to use. How do I go back?
Yes, to just click this one. Go back to school?
Yeah.
Oh.
There we go. Perfect. So basically, that's what it is. Now, also, if you look at this one, and this, and some people do this, they know that I do this. So for the Billionaire Report, what I do is you can actually also create newsletters. So what it does is it creates in a newsletter format whatever you post it. So every 2 weeks or every month, depending on the time I have, I send it out to all my best clients, including a lot of centimillionaires, billionaire clients, professionals, right? Because it keeps you in the front of their face constantly on a monthly basis, right? And because I'm aggregating it, I know the content's good, right? And so I don't really get complaints from any of these guys, which they normally would do, which would say, take me off the list, right? Because I don't want to be on the list, right? Some do the odd time. And I say, okay, no problem. Because I have my own list on email. So I actually send out, somebody wants me to remove them, I just remove them, right? I'm not using an automated list like MailChimp or stuff like that, right? And that's only because I know that I'm sending this out to some high-powered people. And so I want to make it personalized as much as I can, right? So, but I also don't put their names in the two, right? So I just send it from myself to myself and I just BCC everybody, right? So that way they're all hidden, right? But it's a great format to use. So I wanted to recommend this. So the best way to view how I operate is I do two things, basically. I use Scupa to aggregate all of these online articles from either YouTube, articles, anything I want to aggregate online. And then I created the Medici Wealth Institute, which is really just for myself, my clients, and my strategic partners. The Medici Wealth Institute, I created in Box. Now you can use Dropbox, whatever you want, right? But ultimately I created in Box, and there I aggregate all the institutional information I'm getting, right? So I get institutional information from BlackRock, AKR, all these ones that aren't available to the public because I'm a family office. So there I aggregate that. So when I look at my content, it's first class. So I can tell you right now, and it gives you a lot of confidence, right? So for example, online in my box, I have over 26,000 books, actual books that I've uploaded, right? So at the end of the day, when I'm out, if I want to search something or I want to search some of my institutional material, I can just put in like Warren Buffett or China or whatever I want. Boom, it brings it all up almost instantaneous because it can read all the PDFs, right? So from my side, I know that when I'm doing research, I can pretty much blow anybody away in less than an hour just by doing my own quick searches online, right? Now, what I've added this year, which I've shared in a little bit, is that I've started using graphics a lot more. So I'm starting to add infographics, key charts, stuff from the different programs, because like a lot of us, it's not that there's not great platforms out there. Obviously, there's TradingView, there's Bar Chart, there's many other news things. There's Benzinga, blah blah blah. We all know that there's tons of different platforms. Now, I used to pay for a lot of that stuff just to give me the information. But the reality is we only have limited amount of time each day. I wasn't using a lot of them, right? Not because I didn't want to. I just never got around to being able to get to them. So that's when I started thinking about this, saying, this is stupid, right? Like I'm paying for all this information. I'm basically not even using the darn things. And so that's when I started clicking in my mind, well, how do I get that information into a central spot, which is why I use Box, or like I said, you can use Dropbox or something else. Upload what I want in there. And then when I want to search, I just search my content. Now, if it's something like if I want to search what happened yesterday, of course, you're going to use the real, platforms because I can't upload everything instantaneously. Like I do it, once a day, sometimes 2-3 days, you know what I mean? So I just do it as I get to it because I also have to work, right? So I'm not just trying to focus on this. But ultimately, what I've done is, if you look at it, I've got now magazines on there. So I've got like Forbes, Fortune, all that stuff on my website. Not on the website, but on my Medici Wealth Institute. I've got books. I've got all this stuff. I've got, key institutional information. So for me, when I search, I can do that in seconds. What would take people probably hours or days of research, right? That's a huge advantage in the marketplace, especially when you're dealing with very wealthy people, because they want to know that you're up to date on what's happening. I'm no different than anybody else. Like my memories, as I'm getting older, is not as good as when I was younger, right? I only have so much time to read and do research and analysis, so I needed something fast, right? And so that's why everything I'm creating is an aggregation tool to do things quickly, right? And so I think with Min and some of the stuff that she's doing on the blockchain side and different layers and new technologies, that's way beyond me, right? So that's why I'm going to enjoy guide me on that, because I have no clue what I'm doing there. But I know that there's obviously other platforms out there that can even take what I built and make it even exponentially better, right? And so that's sort of where I think the world is going towards. And even with other family offices that I deal with, they don't have this they don't really have this expertise, right? They don't have the content management. They get access to certain platforms, and yes, they could look at, like, example, a TradingView or other platforms that they use. They can aggregate their financial information using some platforms. But ultimately, even those aggregation tools are expensive. So I bought one for 1 year. It was like $35,000. There was another aggregation tool I was looking at, but they wanted to charge, I think if I remember correctly, it was $2,500 per family per month, and an extra $500 per child that comes aboard. Now, how many families do you think are lining up to buy that tool, right? So this is really geared towards the rich, but the rich aren't that familiar with this stuff either. Like, the rich built their money on real estate, manufacturing, whatever they did, industrial, trading, selling, whatever. So it's not like they're the tech guys. And the tech guys say, I'm not going to pay for that tool. I can create it myself, or I use some other tool, right? So at the end of the day, I don't think that's the best model what's being promoted right now. There are some good platforms out there, but for what they're charging makes no sense to me, right? I tried it. Content was phenomenal, I got to admit. But really, even there, even though I spent all that money, I only had a limited amount of time to use it. I couldn't spend all my day on their platform, right? And so that's why I stopped after 1 year. When they said to renew, it's not that I didn't like the platform, but I thought for $35,000, I'd rather do something else with that, or use it on myself, right? So it makes more sense than just keep paying $35,000 a year, and that's US. Right. So I think at the end of the day, you have to be really careful. And so for me, what I did is I said, okay, enough of this. I think what we need to do is use free tools. Free or minimum, right? If it's free or at minimal cost, we use it. If it's expensive, wish you the best. I'm not going to be the guinea pig to use your platform or tools, right? And so that's why, with Joy and with Min and others, I'm looking at all these different free tools, right? Because ultimately, I want free or minimal costs, right? Because I don't mind paying something, but like even like TradingView, like I've got the upper one, I think it's $110 a month or whatever. Kind of bugs me that I'm paying $110 a month, but that's still way better than $35,000 a year, right? Any way I cut it, right? Scoop it, I pay again close to, I think that one there is about $80 a month, right? But that's because I was grandfathered and I've got their upper contract. But you can buy, like I said, you can use Scoop it for free, or I think their middle one is like $20 or $30 a month, right? For a number of ones. But you can use free to start, right? Like you don't have to get into a paid program. So that's sort of my guidance to you, is try to always use free or minimal cost, on anything that you're trying to use for your trading or for your business or whatever, and only pay for something if it's extremely valuable for what you're doing. If it really differentiates you, then maybe you want to consider that, right? But overall, I've tried the expensive stuff, and even though some of it is good, you just, unless all you're going to do all day is sit in front of your computer and use their platform, which you're not going to do, it's just a waste of money. And for the odd client that you may get, which could recuperate what you spent, I think it's too high risk. Because if you don't get a particular client within a year, then you just blew $35,000 for nothing, or 32, whatever it was, 32 or 35, right? But I think that's why for yourselves, I honestly recommend use free or cheap, right? That should be your guidelines. Now, in regards to trading, let's start off with some basic questions, because this week was an interesting week, to say the least. Right? So, how many of you think gold, and this is what you've read, heard on TV, heard on the net, whatever, how many of you think gold may reach $2,500 or $3,000 an ounce sometime this year? Okay, one person. Anybody else? Okay. And how many of you think that, let's say, Bitcoin may reach $75,000, $80,000 this year on the low end? Okay, it's a bit more people trust Bitcoin. Right? So, if that's the case, and I agree with both, right? I think gold will go up substantially, so will silver, right? And I also think Bitcoin, Solana, ETH, all those are going to go up substantially as well this year, right? So why did the market crash in the last Friday, this Friday, right? So I don't care if you think the market is going to go up. If you actually buy one Bitcoin or you buy an ounce of gold, the market didn't matter if it crashed. Even if you bought gold, let's say at 23.8, and the market crashed to 22.9 on Friday, you lost $100, $110 right around there. Who cares? You're not going to cry, right? If you use leverage, that can cause major losses, right? Because the leverage starts to compound quickly as the market drops, right? And so I'm a big boy, right? So if the market does well, I take the credit. If the market does bad, I got to take the losses, right? So it's not like I'm going to sit here and cry because the market crashed, right? But I learned something very, very interesting yesterday, which really pissed me off, right? Is that I don't care that the market fell. I actually was waiting for the market to fall, right, to buy gold and silver because I was out of it, right? So I was actually thrilled that the market fell. Now, I got in heavy and the market kept falling. So I took some major losses, right? That sucked, right? But I'm a big boy. That was my decision to go in heavy. Nobody forced me to go in heavy at a certain price, right? So then, why am I pissed? It's like my decision. The market went against me, right? Like there's nothing to be pissed about, right? Except the hard lesson to learn is that non-farm payroll report that came out yesterday was manipulated. Those are not real numbers. There's so many contradictions in that freaking report, you could drive a semi through, right? So they did that for political reasons, and they also did it because governments and financial institutions wanted the price of gold to fall so they can get it back in cheaper because they didn't like paying the higher prices as gold was going up, right? So I don't care what they do. When they affect my pocketbook, I get pissed, right? That's my money they're playing with, right? And so that's sort of where you got to be really careful, right? Because right now, partly because you're in a U.S. election season, and you also have these financial institutions and governments which don't like the price. Like they drive. Actually, it's the stupid thing is they drive it up, and then they take their profit as everybody else is losing money on the way back down, right? So it's almost a pump and dump that they're running the big companies and institutions. But at the end of the day, the reality is I can't control when somebody puts out bad reports. And that report, then yesterday you'll notice there'll be major corrections coming out in the next 2 to 3 months on that report because it's totally fabricated, right? So they said there was 272,000 new employees hired. Not a chance. If you look at it, unemployment rate went up for Americans, and Americans actually lost jobs. What went up was immigrants and non-immigrants. And a lot of that is part-time work. Now, if that's not bad enough, if you're a working person and you're having a hard time making ends meet, some people are running 2-3 jobs to try to put food on the table and pay the rent and take care of their family. They count those as all independent jobs. Like, this is craziness, right? And so when you start playing with numbers like that, you saw a major decline in gold, major decline in silver. You saw Bitcoin take a hit. You saw ETH take a hit. You saw Solana take a hit. You saw everybody take a hit because of a false report. Now that pisses me off. Sorry, it does, right? When it affects my pocketbook, then I get angry, right? Now, I wouldn't know a lot of this except that because I do get a lot of institutional information and through Medici Wealth Institute, I know a lot of this background information, right? And so when I look at what they do and they pull that stunt on Friday, that makes me angry, right? Because I took a loss on Friday that I should have never taken, right? And not only did I take a loss, they screwed up my next trading week. Now, I went back in and I restructured, but I was set up beautifully for next week. Like, I was going to make it, if you thought this week was good, oh, next week was going to be a home run, right? But they messed it up because of a short-term dip based upon a false report. That makes me angry, right? And so when you're in trading, unfortunately, you're going to run into that, right? And there is no way to protect yourselves because we're not the ones generating these reports. We're not the news media. We're not the government. We're not the financial institutions. And so we can use trading tools, and Minnow talked about some of those. But ultimately, when people pull out these false reports, it hurts us as traders, and it hurts us badly, right? Now, these big banks and institutions, governments don't care. Like, for example, this whole thing about the Chinese government, pull back on buying gold this month or May. Like, yeah, they were all pissed about the price of gold going higher, right? So who the hell wants to buy gold at almost at a top price, right? So of course they're going to cut back, right? That's why I got out of gold and silver. I knew I took my profit. That was part of my 320%. I took my profit, got the hell out. I knew it was going to crash at some point. Totally okay. Like, I was ready for a market correction, right? But I wasn't ready for a BS non-farm payroll report, right? That one, I only figured out later last night and this is today, right? Because when you're working, you can't just, okay, you hear the report. Oh, well, okay, something came out and, I guess, it's working against me. I thought gold was going to fall or whatever, right? I get it. But when I do research afterwards and I find out that there's major things wrong with what they did, that makes me angry, right? Because that's just strictly political, right? Because what they want to do from a political side is they want to say that, hey, the economy's doing fine. Look at all the jobs that were created, right? They also don't want to lower interest rates right now in the States, right? Canada lowered them this week, but the States doesn't want to, right? Because as soon as they start lowering interest rate, that starts to generate inflation again. Inflation is still not that cheap, right? So they don't want to create a hyperinflation scenario, so they'd rather keep interest rates higher, right? But at the end of the day, if that was the real case scenario and you put it into a report that's honest, I'm a big boy. I'll take the loss. Right? That was my decision. And plus, I was out of the market anyway, so I only got back in because I knew that was okay. But when I found out that the numbers are fudged, that makes me really angry, right? Because I think at the end of the day, that affects all traders, and we took a major loss. So now, this week, I'm set up again. Like, okay, I took the loss, I'll shut up about it. It's, and I did get back in at these lower prices. Now, it doesn't mean the market can't go lower, right? I don't think it will, but doesn't mean it can't. But I think at the end of the day, what upsets me is that I took a loss because of a fake report, and that's not right. Right? Like, these are supposed to be honest, objective reports that are being put out of what the economy is supposed to be doing. They're not, just in case you're wondering, right? And so at the end of the day, just be aware, right? Because that's really critical, that you could get caught up in something that's outside of your control. Now, when I trade, I keep it very simple, right? Like, I do have different indicators that I use to look at sort of a brief overview of the market and what it's doing, right? But overall, I just use my gut at the end of the day, right? And because I'm not scalping, which means you're just taking shorts up and downs, depending on how the market is doing, I want to go in longer. So if I think gold or Bitcoin is going to go up, I want to keep buying it at the cheapest possible price. And as I buy it at the cheap possible price, if the gap between what I previously bought and the new price is bigger, I'll dump my I know it'll catch up. And sometimes I keep it just for the sake of keeping it because I know it's going to turn around. But sometimes I look at it because we have a limited amount of money, all of us, right, that we're playing with. So if you have a lot of capital behind you, I wouldn't sell. Right? I would just take the loss down, keep buying cheaper, and then just ride it all back up. That's the best way to make a ton of money, right? Because not only are you closing the gap of the loss as the market moves back up, but because you bought at a lower price, you're also making money on those new trades as the price moves back up, right? So you're double whammying it, right? So it's a phenomenal approach if you can do that. But if you only have a limited amount of capital, if you bought something previously and you want to buy something lower, you're going to run out of your margin room and free cash, right? Because you only have so much in there, right? So what I do is I just replace, right? If some market drops, I replace what I bought before, same thing at the lower price. And if I have to take $1, $5 loss, I take it, yes.
That's called DCA.
Yeah.
I don't know where Robert stands on that. I've never heard him comment. So
That just works for me, right? I honestly, if you have the capital, I wouldn't do that. Right? I would rather write it down, keep buying at lowers, and write it back up. That's the best way to make money, right? But when you're only playing with a little bit of capital, then I would say you don't really have a choice, right? Either you got to stick with what you had before, right? Or you got to sell it and rebuy at a lower number and take the loss, right? Now, if you really believe the trend's going to go up, so let's say, for example, I bought at 22.90, and I think gold's going to go back up to 23.50, 23.70, whatever, right? That's going to be huge, right? And so if I had bought something at, let's say, 22.98, and I had the money, I would just keep both. Like, why the heck would I sell when I know it's going to go up substantially, right? But at the end of the day, if you only have a limited amount of money, I can't do both. You got to make a decision. Right. And so what I do is I say, okay, well, I bought it 22.98. I'd rather dump that, take the loss, and buy 22.92, right? Because that pretty much guarantees that money back, right? Whereas the other way, all I'm doing is I'm closing the gap with my loss, right? I'm not actually making money, but I also took the loss when I sold, right? So it's like, that's why it's kind of a wash, right? But if you can keep both, that's the ideal, obviously, right? And so when I made a lot of my money this week, I kept both. Because I knew, for example, when silver fell under $30, I knew it was going to bounce back. There's just no freaking way silver was going to stay below 30. So I went heavy and I kept my silver on my previous ones, and I just bought a lot more. And then it bounced back. It went back up to 31. So I made a ton of money, cashed out. I was happy. It was a good week, right? But Friday, the reverse happened. Like, silver not only kept falling below 30, but it went all the way down to 29. I think it was 13 or 12, right? So at the end of the day, that was a big drop. Now, having said that, I went in heavy with silver again at that price, right? Now, doesn't mean it can't drop further down, but I look at it this way. I think silver is going to go back over $30, right? So if I have to take a loss in the short term, I'll take my loss. I'll throw in a bit of extra money if I have to my personal account just to cover any short-term losses, but I'm not going to get out of silver, right? Also, silver is undervalued compared to gold. So the upside for silver is going to be more than gold. So I went heavy with silver. Now I went into gold as well. And I went back into Bitcoin and Solana and all this stuffies, ADA. I went back into Doge. I went back into all these because of the hit. Now that doesn't mean, like I said, got to be careful. Doesn't mean the market can't go lower, right? But I think all these are going to turn around. And so for me, I'm just going to hold what I got. And if it goes lower this weekend or next week, it goes lower, right? If I have to throw in a bit of extra money to keep my, free use of margins in line, I'll throw in a little bit extra money, right? But I'm 100% certain that they're going to turn around. So I don't have no doubts in my mind, right? Now that's sort of where I think from your side, whatever you trade, and I'm new to trading, right? I saw like I'm not Min's category at all, right? But at the end of the day, what I've come to realize is you have to know the prices. So for example, today, Solana was trading around 159. I think now it's down to 157. So I sold out at 159. I bought back in at 157, right? And I actually bought a bit more. But Solana last week was close, or actually this week, was close to $173, right? And it has actually been higher than that at times. So 157, the question is, do you think it's going to go back up? Or do you think it's going to keep going down? I think it's going to go back up, right? Everything I've read suggests it's going to go back up. Everything I've read on Bitcoin says it's going to go back up. That doesn't mean I bought Bitcoin, I was in 67,000. But see, let me tell you my Bitcoin story. I got into Bitcoin. I knew the price of Bitcoin was going to go back down once it had hit 72, right? And a bit higher. So I waited and I got back into Bitcoin around 63,000, right? 62, 63. Now, I was nervous. Again, that's my fault, right? I was nervous about could it go lower, right? And so what I did is I kept my stop loss below what I bought, but I didn't have a huge gap in my stop loss. And sure enough, it always seems to happen when I'm sleeping or working, right? It was a quick dip, kicked me out because of my stop loss, right? So I woke up. I think that's what happened while I was sleeping. I woke up and I thought, okay, this is good because Bitcoin had, I think, was moved back up to around 67. I looked, I had no Bitcoin. And again, I was pissed, right? Because I'd actually had quite a bit of Bitcoin and I got stop lossed out, right? So I bought back in at 67, right? And then Bitcoin went up to 71, right? Now it's back down to about 69, may go down to 68. So I bought back in. So this time what I did is at my 67, I had my stop loss at 69. It kicked me out. So I bought back in around 68, right? Now it could go lower. And if it goes lower, I'll buy more, right? But at the end of the day, you only will do this if you really believe it's going to go up. If you think Bitcoin is going to drop to 60 or 55, which it could, right? You can go lower. Nothing prevents that from happening. But if in your gut that's a concern, then don't go in heavy. If you want to throw in a penny, 2 pennies, right, to try it out, with some leverage, go for it, right? Because you might lose $5, you might lose a few bucks, you might lose $20, right? Like, okay, right? But when you went heavy, and that's why I was so pissed about Friday, because I had close to $600 in margin, right? So I went a bit heavier into gold and silver. And so when the market kept dropping, they're generating major losses, right? So at the end of the day, when I look at that, I say, okay, I think Bitcoin is going to go back up. So I think right now I have like 4 cents on Bitcoin. It's not like I'm betting huge, right? Because I don't know if it's going to go back up right now. I know it will. I don't know if it'll drop a bit more. So what I've done now is my previous trading, and the reason I was making such big returns is I was going in 5 cents, 10 cents, 20 cents, right, on a trade. And when it worked, oh, you're feeling like a rock star, right? Because you made 10,000% return on one trade. Like, hey, this is great. And of course, when you lose, you can lose 10, 20,000% on one trade as well, right? So, but when you lose because of the compounding on the downside, that could be a big loss. It could eat away all your free capital, right? That means you got to either throw in money or sell something else to bring back in some free capital, right? So now what I'm using is a different strategy. I just go in a penny, maybe two at the most, right? But I go in a penny every time I see something I like. Market drops a bit more, I throw another penny. Market drops a bit more, I throw in another penny, right? So I still may get up to 5, 10, 20 cents, right? But a penny at the time, right? And that way, even if I have to sell some of my higher ones that I bought previously, I'm selling a penny, right, worth of leverage, right? So that may be, again, a few dollars loss, maybe 90 cents loss, and sometimes they'll hit $20 loss, right? Because it depends how fast it falls, right? But I'm selling off at a penny is not the same as if you put in, let's say, 5 cents, and that $20 is actually $100 loss, right? So it's a lot safer by going in small, right? And that's what I do, right? So right now, I would say on silver, I probably have, I don't know, maybe 23 cents in silver. I probably have around 10 cents in gold. I think 4 cents in Bitcoin. I think 20 cents in ETH, 20 cents in ADA, 20 cents in Doge, right? But I don't try to go in big, right? Now, I think when you've got bigger amounts of capital, you can do this with stocks. The problem with stocks is that, at least on MetaTrader 4, is the minimum that at least I found is $1, right? So if I go in $1, and that's and I use 500 to 1 leverage all the time. I never change my leverage. I let everything ride 500 to 1, right? So at the end of the day, if I do 500 to 1 and I put in $1, then I put in $500. Let's say I use NVIDIA on NVIDIA, and NVIDIA does good. Again, fantastic. If NVIDIA does bad, I let roll a lot of money on one stock. That's just too risky, right? So my goal is right now, I'm looking at the indicators. I'm learning some different strategies that I like to use. I'm seeing what's working. And I force myself initially, and I would recommend this to you guys as well, is initially as you're getting into trading, trade small, but trade every day, right? It's terrible when you trade every day. I would never recommend that as a strategy. But when you're learning, you want to get the experience of every day because every day is different. Right? So sometimes you'll be in an up market, sometimes you'll be in a sideways market, sometimes you'll be in a downward market, right? And you're going to learn what strategies that you like to get into that marketplace, right? And what you'll find, like I found, is some of the strategies that I was using previously don't work very well in other markets, right? So a strategy that works really good when an upward market, where I just kept buying the dips, the market kept turning around. I look like a genius. Like, I made like 400 or 500% in a month. Now, when the market turned and started going downwards, then I look like a complete idiot because that strategy just means you keep buying at the downward market at more and more losses, and then you're selling to buy more losses, and then that keeps going down. So you're selling, buy more, and so you just keep losing money, right? And then in a sideways market, you're not doing much, right? You're just sort of sitting there with your money, and it's not doing much, and so at the end of the day, you have to sort of experience that. Now I don't trade that often. Like I set myself up based on what I think the week was going to do. I set myself beautifully for next week. I had a great week this week, and then Friday came along, right? And so Friday is just another reminder of you got to be careful with the marketplace, right? Because there's things outside of our control, which affects how we do, right? So that's sort of things I've been doing. I know Min's been guiding me as best she can. I'm a slow learner. So I don't necessarily, even though she tells me to do some stuff, I listen, and then I sort of do some of my own stuff. And sometimes it works, and sometimes I look like a complete idiot for not listening. Right? But that's just part of the learning process, right? And so just have fun. If you're going to get into trading, right? It's start small, like gain experience, right? It's the experience that you need, right? Like I talked to Joy about this. Like honestly, as I'm getting more and more experience, and with Min's help and stuff, I may like probably not right now, but maybe in the fall or early next year, I might go in like $50 or $100,000 and try to implement my strategy with a lot more money, right? Right now, I'm in a couple $1,000, right? And even that's too much. Sometimes I feel like, oh man, I can lose that. So, but you don't even have to start that high. You can start, like when I first started, I started with $500, right? And then I went more over time, right? And so just start with what you want. Start small, trade it a penny or 2 pennies. Right? Just gain the experience, right? Learn how to read the market, right? Learn how to read the indicators. Learn how to feel what the news cycles are like, right? And then when you're doing it, then you can do way better. Now, the only thing, and Min, we talked about it with Min, is that I honestly believe you buy on dips. Right? Like when gold was around 2370, 2380, oh, it's going to reach 2400. When something is frothy in the market, doesn't mean it can't reach 2400. But that's high risk. And on Friday, it would have been super high risk if you would have been in at those high prices, right? And so at the end of the day, just buy dips, buy cheap, right? Now, it doesn't mean, like I said, the market won't mess you up and it'll take some short-term dip and knock you out, whether it's stop loss or go much lower than what you think it would have done. But if you're buying cheap, like even for me, because I bought a lot of my gold and silver, at least the gold, from 2300 to 2305. So it went down to 2292, right? Again, it wouldn't have been the end of the world if I didn't go in heavy. I went heavy because I didn't think it was going to break 2300. That's my fault, right? Because I didn't think it was going to break 2300. But the only reason why I felt that way is I hadn't read the non-farm payroll report yet. I just sort of saw the numbers. I thought, it'll sort of balance out around 2300. I should be okay to go in heavy. But if I would have had the time to read the non-payroll report, I would have gone in at 2300 or 20 because it's all BS was in that report. So there was a high probability it could have fallen below 2300, right? But again, when you're working, I don't have time, right? I don't have time always just to look at my trading and say, hey, I'm going to be able to do this, right? So I took a gamble. It backfired. But again, I'm only upset not because of the loss. I'm upset because they lied. That report, right? And that cost me a loss. And that makes me angry. So, but at the end of the day, just try. Play little, right? Play safe. Only put in the amount of money you could lose, right? And actually, the way I look at it is ideally what you want to do, and that's how I built up, is that when you start playing, view the extra money you make, hopefully, right? You may lose money. You may have to inject a little bit more sometimes, right? But if you keep it small, it's affordable, right? But when you're building up, then as you're building up, use that extra profit as a float, right? And what I mean by that is the market's always going to be doing this all the time, right? And so if you have a float and you have some money set aside, then when the market dips, you can afford to go in a little bit more because you've got some money on the side. Right? If the market drops more than you expected it, you have a little money to move back in to keep your margins at a reasonable level, right? So you only do this as you're doing it, but do it with small amounts, right? Now, as you get better and better, then you can go a bit heavier. But just like I did on Friday, just because you're going heavier doesn't mean you're going to always win, right? And the only reason why I went heavier on Friday was I was setting myself up for next week, right? Because I knew that I had a really good week. And I knew that what I was doing, because I waited for the price to drop, things looked really good for next week, right? And there I went in heavy. So I was at probably over 60 or 70 cents in both gold and silver. Right. So when they kept dropping, then that can tell you why it started to escalate very quickly, right? To losses, right? But at the end of the day, again, that was my choice, right? And if I had read the non-farm payroll report, I wouldn't have done that. But I thought they were being objective, And I learned the hard way that they weren't being objective, right? So, that after the fact doesn't help, right? So, on that note, I'll turn it over to questions if you have any.
Your question. So, do you think that BlackRock and Grayscale are manipulating the price of Bitcoin?
Oh, absolutely.
Yeah.
I think the way I look at it is this way. The whole idea with Bitcoin was to be decentralized, right? And so 100% supportive of that. Now, Bitcoin on its own will only go so high because the retail market doesn't have the cash flow to inject in to really drive it to the numbers that people think potentially can reach to, whether it's hundreds of thousands or millions, or so you need institutional money. But institutional money is like inviting the devil to the party, right? Because institutional money cares about institutional money, right? And so if you look at a lot of times with Bitcoin, you'll notice it goes up and then takes a big spike down quickly. Where's the logic to this, right? That's because institutional money drives it up. They take it down quickly, clean out all of us in the process, right? Get rid of all the stop losses, right? And they come back in and buy. And then you'll notice even on the candles that a lot of that happens in a wick. That's how fast it moves, right? Because what they do is they'll drive down the stop loss immediately to try to take major profits, even though they are going to take a short-term loss.
The shadow suddenly.
That's right, right? So with Bitcoin, what you're going to find is that now that we've let the devil come into play with BlackRock and some of these other ones, it's not going to be the old Bitcoin that we saw in the past. You're going to see much more unknown volatility because they'll decide when they want to push it up and when they don't want to push it up, right? And if you want proof, look at gold. They've been manipulating gold and silver for so long, it's a joke. Like if you look at gold compared to the marketplace, gold should be way higher than what it is right now, right? But they keep manipulating it. They want to keep it low, right? For them, 2,400 was too much, right? Gold should be in the way more than that, like, you know what I mean? So, but they'll keep manipulating. And now that we've let the devil in with Bitcoin and a lot of these crypto now with ETH, right? That's our new partner, right? Is these institutionals. And so you got to really be careful to see what they're doing, right? So, on the indicators, make sure you're looking at what smart money's doing. Make sure you're looking at what bank money's doing, right? Because those guys can try the market any way they want, and we have no say in it. Now, does that mean that Bitcoin won't reach 100,000, maybe a million, maybe 500,000, whatever the heck it is? These institutions aren't stupid. Of course, they're going to want to see that at some point, right? Unless the government does something to block them, right? But they won't, right? Because they're in bed together, right? So at the end of the day, they will drive it up. But in the short term, whether it happens in the next 30 days, 60 days, 2 years, your crystal ball is as good as mine, right? Because at the end of the day, they're going to want to keep it as low as possible while they're accumulating.
Yeah.
And that's what they're doing now. They're accumulating, right? And as they're accumulating, they don't want to see Bitcoin at 100,000 or 200,000. For them, it's stupid, right? Like they want to see it. They'd be happy if it dropped down to 40 or 30.
Yeah.
Like then they'll be doing the dance of joy, right? The rest of us will get destroyed in the process, right? If you're trading, but they don't care, right? Like so, that's sort of where you got to be really careful, right? And is it good overall? Probably, because now you've got bigger institutional money. And so it can drive up to a much higher level. But in the short term, like I said, that's just no different than the non-foreign payroll. Like you're in bed with manipulators, right? And their only concern is the money they're making, not what you're making, right? And so unfortunately, they're playing with our money and we have no say in the matter, right? Other than trying to be as smart as we can. But that's hard to do when they're controlling reports, they're controlling media, they control all this stuff, right? So just got to be wise. That's all you can do. I don't know if you agree, but
Yeah, it's true.
Hopefully that answers your question.
Does, yeah.
Any other questions? All right. Well, thank you so much. And well,
Thanks,
let's
Enzo. Thanks for sharing your wisdom with us.
Oh, you're
and
welcome.
what you're learning.
the hard way.
This is what it's all about, learning, right?
Yeah.
So,
hopefully we have another great trading week. So how about we let everyone chat and introduce themselves for a bit?
Yeah, just we still have 1 hour
Okay.
for networking. Maybe we can introduce.
yeah, let's go around and
Yeah.
everybody say who they are and why they're here and what they enjoy about this
Yes.
kind of space, right?
Yeah. So then we know each other better.
So let's start over here.
Okay.
Second.
I'm really happy to have you here. I'm Yasama's friend. She's my master in cryptocurrency, and she invited me to come here to make use of your experiences.
Yeah.
And I'm really happy to have you here. I owe everything to her.
Hello everyone, this is Yasama. I actually trading for 4 years in cryptocurrency, especially in future part. And most of the time I scalping, and I'm a student at MBA, studying at MBA at Trans Western University. And I passing just this street, I suddenly see the Bitcoin and catch my eyes. I came here and that's it. I'm here.
Great.
Thank you.
So maybe you can be our next speaker.
Yes, that would be great.
She's very professional.
There you go.
So which platform you are using for forex and crypto?
I just use the exchange. It's Maxi. Yeah, I like trading view.
Okay.
I'm Terry Kredovic. I live in East Vancouver, and I found out about the meetup group that Melanie started in West Vancouver, further down the road. And I went to Bitcoin because I thought that I could get involved with Bitcoin to use it as a financial asset, so I could develop some of my products, which are new inventions. That's what I work on. And I've come up with a bunch of things, but I don't have the ability to produce any of them. So that's why I'm here.
Hi everyone, my name is Reza. I'm medical research at BC Cancer Research Center, and interested a lot in the crypto, so I'm here to learn more about it.
Oh, hi. I already introduced. My name is Chen. As a manager, actually, it's my good start. I have learned a lot from. I invested for some specific crypto about 5 or more than 7 years ago. And gradually I understand those decentralized concepts. But for the trading, I'm still a beginner. And also I feel quite a similar feeling what Enzo said. Yeah, actually, I can see there is so many information, and some are manipulated and some are true, some are risk. But even you can identify it's a, let's say, false, but it's really affect the market. So this means even that's not real news, but you need to understand how it will impact the market, because we are not just trying to judge which is true, which is, but it's affect the market.
Yes.
This is what we need to understand. Yeah, and well, I'm glad each time we have some new member joining, and also I can from each of you guys, I can learn something from the different aspect, and not only the crypto, also some experience, some you thought. So I'm really enjoying this time.
Hi, my name is Michael. I've been coming here, I think it's been 3 times now. I just moved to Vancouver. I've been learning about crypto for like 3 years now. I don't have any experience yet, so but it's important for me to come to a place and see real people talk about these things, and get a chance to be mentored by these people. and yeah, so I'm interested in like cryptocurrency trading, forex, futures, and AI. Yeah, so this is it. Thanks.
Nice. I'm Joy. I work also with Enzo at the Lujan family office. And I also run my own company in AI for All Inc. And right now we have a social network where we discuss the wonderment and the scary parts of AI. And I also teach many different aspects of AI to entrepreneurs and to college professors and to students. And I hopefully translate to them the joy of AI. And so that is a growing network. If you want to join it, it's aiforall.live. That's FOR. Happy to have you there. For anybody from TSA, it's 20% off the one-time lifetime membership, which is $97. So if you just write TSA, you get your 20% off. I'd love to see you on the inside because it's so exciting to share with you all the tools and the library that I've amassed in there. When Enzo's speaking about his library, I also have a library that's AI centric and also around emerging technologies inside of that platform, which is really useful for those who venture forth. And it's as good, it's like anything else in life. It's as good as you make it to be, right? So there's a lot of AI experts in there and data scientists and people you might want to meet and network with. Also on the sort of the cutting edge, but that lasts for only so long in AI, of clone technologies. So I've been experimenting with clone technologies and using clones to speak with clones. And I had an experiment about a week ago and it worked out really great. I just wanted to share it with you because it was quite tremendous. So I made the Joy of AI clone with a body of knowledge, which includes my own experience, my own thoughts, books that I've written, and my resource library. And I know that Brian Tracy had made a similar clone. Now, maybe you're too young to know who Brian Tracy is, but the power of public speaking, right? He's a public figure that talks about public speaking. He's done very well with his books and his authorship, and he's a thought leader in the world. So he has his own clone. So what I did was I put his clone in the kitchen and mine in the office, and I pressed play, and I had them have a conversation together, unscripted, not moderated. And those clones did a fantastic job. Now, we're both a bit verbose and we're both kind of know-it-alls, but actually the information that came out through the course of conversation is excellent material and very helpful for anyone who's in the entrepreneur space and wants to learn how to apply AI and learn more about public speaking. So clones can talk to clones, humans can talk to clones. Yes, it's a little bit scary, but it's also quite awesome because where we're going to go with this eventually and very soon is, you know, who's here ever said, I wish I could make money while I'm sleeping, right? Because that's why we like, and who's ever said, oh, if only I could clone myself, right? Like I could do so much more. I could help so many more people with all that I know. I could reach so many. Well, now you can, right? So what we do is we gate off your body of knowledge and put that into a clone atmosphere. And now we just added video. So now we're having video clones come and interview each other and people can interact with the video clone of that persona or person. So we're really in that space of wanting people to be able to monetize their knowledge and their expertise in a way that's convenient to them and that they can share their information with the rest of the world. So that's